Sweet. Good morning and welcome to today's 10 at 10, which is available for everyone. Now, we're going to close off our final stage of our profit hacks, which is shortcutting your way to an extra monthly 1K. And we're going to cover interest charges and cashback cards. So really interesting topics here because actually there's quite a lot of savings. So the first one we're going to start off with is interest charges. So do you have any debt on credit cards? Now, obviously, all credit cards will incur some sort of interest charge somewhere down the line. But of course,
usually monthly, usually very expensive.
Yeah.
It's the most expensive borrowing that there can be is credit card debt.
Mm-hmm. It's always short-term, high interest rates.
Yes.
And essentially it's just cash, which if you manage it more effectively, you can actually make quite big savings on debt on credit cards. So if you have any promotional offers available, do take advantage of these. But of course, do check the fine print, make sure you know what period it relates to. And of course, work out whether if you transfer money to, say, an interest-free card, make sure that you actually save over the period of the promotional offer versus, of course, the one-off transfer fee which you'll incur from making the transfer in the first place. Now, the thing I will point out on interest charges on credit cards is if you have, say, debt of £6,000 at a 20% interest rate, this is easily £100 a month.
Mm-hmm.
So transfer this to an interest-free card, assuming, of course, you have the option available to you. Do look around, do shop around. There are quite a few options. But if you do have the option available, transfer it to an interest-free card. It can save you oodles of money, and essentially what I class it as is dead money. Is you can't do anything with it, and quite frankly it's much more efficient to investigate making a one-off transfer fee. If you do transfer money between credit card accounts, what you'll probably find is you incur a fee of, say, like 3%, 2%, whatever, depending how generous they are.
Yeah, and depending on the offer available at the time, so it often changes by card, doesn't it?
Yeah, each supplier varies quite substantially on that one. But generally what you find is that it probably costs you about £180 to transfer £6,000.
Yeah.
Now, the reality is if you're interest-free for, say, a year, you're going to comfortably save on quite a lot of interest, because actually over the year you're looking at about £1,200 worth of interest versus a £180 transfer fee.
Yeah, depending on whether the card gets paid down or not. But quite often we see cards are taken out, something is paid off on the card, and then the intention is that it gets paid down, but it doesn't. They just end up paying the minimum balance, so the interest charge remains flat.
Yeah.
So what you need to do is set up a repayment plan so that you pay the minimum interest charge, but also pay a little extra by standing order to try and reduce the sort of capital amount that's on that card.
Always do a fixed amount. It's so much better. Don't just transfer.
Build it into your cash flow forecast.
Yeah, build it into a forecast. It's predictable. Make sure you know the day, of course, the amount. You can build it into a cash flow forecast. You can work it out. And most importantly, if you're reducing the balance, even if you haven't cleared the full balance by the end of the promotional period, the interest charge you then incur will be lower because you've reduced the capital by so much.
Or you then swap it to another card and you pay another transfer fee, which is just at the 2.5% to 3%, to then put it onto another interest-free card. So card swapping is really, really common in small business. It's not ideal, of course, because we're not advocating in any way, shape or form that you should incur credit card debt. But if you have it, if you couldn't avoid it for whatever reason, then you must try and manage it so that it's as efficient as possible.
Yeah.
And you can do that with interest-free cards.
And the one thing I will say is always aim to clear the debt. That sounds really daft.
Yeah.
But always aim to clear the debt. Don't just set the minimum. Don't just use it as an extended overdraft facility, essentially. You want to clear it down. Otherwise, you don't make the savings.
Yeah,
and of course, it's just this ongoing thing which just causes cost to your business and you in your personal life. It's more hassle that's worth. So aim to clear the debt.
Yeah.
And then also, what I would say is, as well as saving on interest charges and credit cards, you probably have arrangements with your bank account, and you can probably get extra savings with banks as well. So you can save on interest charges, but you might actually be able to get more interest received as well, depending, of course, on which bank accounts you have available to you, what promotional offers they have. There's always something out there. So always worth shopping around. Remember, some banks offer loyalty fees. So they give you physical amount per month, fixed amount, and others will give you accelerated or boosted interest rates for depositing, say, X amount if it's held in the account by a certain time frame.
Yeah.
So really good incentives here, and make sure to take advantage, because remember, interest, if you're paying it out, it's just lost money. And actually, if you're getting it in, it's money you don't have to work for. So it makes a really big difference.
It does. And some cards, so moving on to our point 2 now, some cards offer a cashback. So there's a Barclays card that does a cashback for every pence that, every pound that you spend. So if you do pay for goods with cards, then it might be worth your while investigating whether or not you can pay for it with a cashback card. Now, a typical UK cashback is a measly 1%, so it's not a huge amount, but if you bought, say, £10,000 a month on goods, services, stocks, all that kind of thing, normally through your bank, but instead you put that through a cashback card, you could easily earn £100 per month, even at 1%.
Just doing what you normally do?
Yes, and then you set and forget the monthly direct debit. But what you really need to make sure is that if you're paying on card and getting extended credit terms, you don't spend that money on something else instead. Put that money in a bank account somewhere, hide it away, make sure that it's not in your day-to-day spend pots so that you do pay your card down in full. So we do see people use Amex cards so that they get the flights. If they do a lot of international travel, we see people using cashback cards and use those quite effectively, so long as you're able to cover the direct debit when it comes out the following month. So if you can't cover the direct debit, then any benefit you might gain in cashback is immediately wiped out in interest charges, which of course is what we're trying to avoid.
And also, if you do happen to have a direct debit coming out each month, just make sure to manage it into your cash flow so that you've got the expected outflow when it's due. Because also importantly, not only if the direct debit doesn't pay down the balance in full, if the direct debit bounces or fails for one reason or another, this can also incur a one-off penalty. And that in itself is one of the highest interest things, like a day overdue, and they wallop you with this fee even though the balance is measly.
Yes, you could end up with a failed payment card from the card holder or from the card itself, and also one from the bank for a bounced direct debit fee. So try and at all costs to eliminate those. So a really useful way of dealing with this is to have a separate bank account to manage your purchases if you're going to use cards to cover your interest rates and manage your interest rates and your cash back. So every time you make that purchase, take that cash out of your current account and move it into your credit card payment account or your purchases account, depending on what you call it, so that cash is then allocated and it builds up through the month before that direct debit is taken. And then of course have the direct debit taken from the purchases account, not from the current account. And that way it ensures that you do manage that cash and you do make sure that you've got that direct debit covered at the end of the month.
And it stops you spending more from your current account, because you're treating it essentially as if you've spent the money from your current account in the first place.
Well, the only time I think there is a risk in that is if you don't keep on top of the purchases account. You can, again, I've seen this with clients, you can get a bit carried away buying stuff because you haven't got to pay for it yet. And you think, well, a sale will come in next week, a sale will come in the week after. And sometimes that just doesn't happen. So you still need to have a rigorous control over your purchases, even if you're using cashback or credit cards to try and manage that. And that manages the payment terms, but that's only worthwhile doing if you can pay the card in full when it falls due. So that was quite a prompt 10 minutes at 10 today with 8.5 so far. So we're doing quite well. So the question now is it worth the effort? We've shown you 18 tips over the last 10 days on how to get a little bit of extra cash in your pocket. So it may be £50 here, £100 there, maybe £200 or £300 on some of the tips that we've offered. But is it worth it? If it is worth it, then do it. So quick wins often take a little bit of effort and they get put off. Now, not all tips will work for all businesses. Some will deliver more profit and some will deliver less. But the one thing that is absolutely certain is that if you take no action at all, and if you don't action any of these tips that we've shown you, then you will make no extra profit. So you have to ask yourself, in every instance, is that cash better in their pocket or in your pocket? Where would you rather that cash would be? And how much difference to your life would that extra 50, 100, 250, £1,000 per month be? £1,000 a month in a small business is easy to achieve if you follow each of these tips and if you make sure that you action them. So instead of saying, for example, well, I can't put this price up, I can't reduce that service, I can't switch to that card. Instead of saying can't, look at what if I could, how can I, where shall I, and then just do it. And if you take that action, you will make more profit and more money in your business. So thank you very much for joining us. If you're in the BBB Club, then you can log into today's lecture and take a deeper dive into this topic. And if you're not in the BBB Club, then please join us. And we'd love to see you there. We'll see you soon. Bye.
Bye.